But yeah, I guess the first question that I would love to ask you to get this episode started would be, could you just for the listeners at home that maybe are not very familiar with investing and are not familiar with the type of work that you do, Jenny, could you just give us a brief introduction on, who Jenny is and what essentially you do and what you've done in the past?
Sure. Well, really excited to be here. And just as a brief background, my name is Jenny Baxter Moser. I've worked in growth investing for the last about 16 years, focused on the consumer space. I've partnered with brands like Smashbox and Elf Cosmetics in the beauty space, and in the apparel e-commerce space, Revolve, and more recently, Vici Collection. And brands in the fashion space, Paige Denim, Alexis Pitar, and then recently invested in a mobile gaming business called Scopely. So really kind of across various different categories, but with a focus on consumer and also with a focus on brands that are doing something disruptive and differentiated in big categories, kind of challenging the status quo of large industries.
Amazing. Well, let's get started with a quick introduction segment that I called Fire Questions. And it's useful because it sort of gets the brain rolling out of the usual brain fog that comes when beginning conversations. And essentially what I'm going to do is I'm going to ask you could be difficult business related questions or life related questions. And you're only going to have 10 to 15 seconds to answer them. Russ is called Fire
Okay.
Questions because you need to give a very fast and solid response. You can ramble. Again, we can edit things afterwards, no pressure.
Okay.
But the more succinct, the better. All right?
Okay.
Cool. So the first question is, what do you think is overrated entrepreneurial or business advice?
Um, well, I think some advice that probably was given in the last few years that may have not have gone well for folks is that you can continue to raise money as much as you need to until your business turns profitable. We saw a lot of companies in the past few years that had 5, 6, 7 year time horizons before they turned a profit, and I think before the most recent period that was not acceptable by investors. But I think there was a lot of chatter and support for those types of business models. I think we've done away with that at this point.
Yeah, so money as a solution to all problems is over.
Yes.
Interesting. And what do you think is underrated business advice or entrepreneurial advice?
I think bootstrapping your business. I suppose it's related to the first answer, but a lot of the companies that I have partnered with bootstrapped their business for 10 years before they took on outside capital. So I think encouraging founders to, resist the urge to raise capital really early, think about creating a sustainable business model sooner than later, which then, insulates them from too much dilution in those early years.
Interesting. And when you talk about bootstrapping and the importance of bootstrapping or funding the business pretty much being a self-funded thing, do you think it qualifies businesses as good businesses because of the character that comes with bootstrapping business, the entrepreneurial character that comes from that, or because of the general health structure that it gives to the business when everything is done progressively, slowly, intelligently, patiently?
I think it's both. I think both of those are really important insights into what bootstrapping means. One is it demonstrates the discipline of that founder or those founders, that team, to be able to build a business with their own capital, their own sweat equity, and get it off the ground without needing to rely on outside capital. That also forces the discipline, watching every dollar you're spending, figuring out the right customer economics, the right unit economics, the right margin structure. It forces that discipline. And you see the inverse of that in a lot of companies that raise significant outside capital very early on, where, your customer acquisition costs get out of control and you never quite get to that point where you're self-sustaining. So I think that forced discipline is really important as well.
Interesting. And what do you think is the next consumer business trend specifically? And you can't say focusing on profit.
The next
Consumer business trend.
The next consumer business trend. I think one interesting trend that I've been hearing a lot about and having conversations about is what is the next top of funnel strategy? What used to be, it used to be that you could buy Facebook ad, you could, very efficiently acquire customers with paid advertising. And then it was, well, you really need to create organic top of funnel engagement. And that was coming through social media content and influencers and or celebrity partnerships. And so now we're moving beyond that, where influencers are not working as well, or the economics of influencers has changed. So what is that next top of funnel strategy? And I think that trend of marrying the right content, whether that's a creator or a celebrity or a community, and how that then translates to an audience and engagement, and therefore traffic and revenue. That, I think, what's the next top of funnel, the next influencer is going to be the next big trend.
Interesting. And what do you think is the biggest lie about business overall being told?
Why? Well, there were a lot of people faking it.
Mm,
This proverbial, when the tide goes out, you can see who's been swimming naked.
yeah.
I think there was a lot of kind of smoke and mirrors going on recently. Businesses that were touting numbers and things that didn't end up being true. So there's been quite a bit of maybe lying is too strong of a word, but not necessarily truth telling in recent years. And you're seeing a lot of that being exposed now.
Mm.
So I think we're getting back into an environment of operational discipline and real rigor. And the businesses that can, really are operating well and have that focus and discipline are going to be the ones that emerge out of this.
Amazing. And favorite brand or business and why? And it could be a business that's been around for 100 years. It could be a business you've been personally involved in or not. Just the one that comes to your mind.
REVOLVE. REVOLVE
Mm,
is and I'm sure we'll talk more about them. But we partnered with them about 10 years ago, and I remain friends with the founders. But that was for me in my career, was such an exciting and gratifying opportunity, partnering with great founders, seeing the business really blossom over the course of many years, and then having an incredible public company debut a couple of years ago.
mm. And I'm guessing it was sort of like the event that I think that everybody gets to have those big wins in their career. That they're the specific ones that make you either the proudest of what you're doing or the most excited about what you're doing. So I'm guessing that was sort of like it for you, right?
Yeah, that for me. I mean, again, I've worked with many amazing brands and founders.
Mm,
And so, it's hard to pick your favorite. It's like picking your favorite child. But that experience with all the elements of it for me and where I was in my career and the role I was able to play with the company really
mm.
made that, a very special experience for me in my career.
Interesting. And what specifically has made you, and that was it, by the way, that was the
Okay.
end segment of fire questions. I always struggle concluding them because I always get interested about people or get saying in the answers, and usually I just roll off of that. But that was it.
Okay.
And I guess the first question to officially start the episode up is, what got you interested in consumer business specifically?
Yeah, I've always had a passion for consumer brands, this kind of idea of being able to put yourself in the shoes of the consumer. What makes her tick? What brands is she evaluating? What does she have in her closet? And what's really going to kind of spark that excitement? I've always had a love for that, even, in my college years. And before I got into consulting, my first path that I was exploring was actually to do the Gap retail management program here in San Francisco, which is kind of known as training ground for people who want to get into retail merchandising, et cetera. So I almost went down that path. And my dad actually was the one who told me, if you do consulting, you can always go into fashion. But if you go straight into fashion, you're kind of setting yourself down a path. But it always had been something that I was really curious about. And it was just kind of the thing that, got that kind of passion and excitement and curiosity going, even at an early age.
So fashion was originally the thing that caught your attention, and then management consulting or consulting was a way for you to sort of like diversify the risk that you were
Yeah.
taking when choosing what career to what career to pursue.
Yeah, exactly. And it's interesting too. So, and that really did play out. I spent 4 years in management consulting, which is kind of business school boot camp. You get to make money, but also kind of go to school, learn the fundamentals of business and get senior access to clients. You're presenting to CEOs when you're 23 years old. You really learn a ton. You learn by doing. And so you do kind of come away from that with a real understanding of business fundamentals, what makes a good business and a bad business, and leadership, management and all of the kind of interpersonal elements of building a business. You learn all of that. And then I was able to when I moved into investing and I went to business school after, I probably learned more at Bain than I did in business school. But the combination of those things, gave me a good foundation for investing. And when I joined TSG, where I spent the last 16 years, what really drew me to the firm more than just the function of investing was the brands that they were investing in. They had a strategy around backing brands that were disrupting big categories. So one of the early brands that put TSG on the map was vitamin water. And vitamin water at that time was going up against the Coke and Pepsi brands in that space, which nobody would even dream of competing with those two companies, but they were using the early years of the kind of early seeds of influencer marketing. They were partnering with athletes and musicians and, creating products that were a collab with an individual, and doing really different things that were kind of turning the industry on its head. And so that type of investing and strategy and partnering with brands like that is really what drove me into investing to begin with. And lo and behold, I have been doing it for 16 years since then.
Interesting. Wow, I wish I would have had a similar beginning to you, Jenny. I wish somebody had told me that management consulting was a thing when I was 18 years old or 19 years old. Interesting. And how has your love or your interest or your passion for consumer business evolved over the years? Did it start with something very maybe, irrational, like, oh, I just like the fun and the culture that's involved working with consumer businesses, to now maybe involving more the community aspect of working together, not only with the founding team, but understanding the customers and the impact that businesses are having directly to people's lives. So how has that passion evolved for you specifically?
Yeah, I think I've always had, and I still remain, I think it's a nice thing of working in a line of work in a category industry that you're passionate about. It stays with you. So even at this point, now many years later, I still get really excited about new brands that I discover and meeting with founders. But I think, going from the original passion of just outside in as a consumer, I can appreciate when a brand is doing something unique and interesting. And then kind of being on the inside and understanding what it takes to create a brand, not only to create a brand, but to continue to evolve a brand so that you can maintain that emotional connection, that excitement with the consumer over many, many years. All the things that it takes to do that, I have so much more of an appreciation for now. And can see a little bit more now when you can kind of have a little bit more of a nose for it when there's something that's real and sustainable about a brand versus something that may be a little bit more fleeting. But I think also just understanding and having an appreciation for the founders and the teams that can build something from nothing to something great. That's a unique skill and talent that, as an investor, that's not what I do. I'm always coming in when a business is already at a certain stage. So that's another element of kind of the passion for this that I think has evolved for me, is not just a passion for great brands, but also for
Great
these
founders.
incredible founders, kind of that have the vision and the passion and the creativity, really kind of feeling that and getting excited by new founders that I meet and being energized by working with people like that.
Awesome. And as you've seen the consumer space evolve, transition, grow, whatever word you want to use to describe it, would you say that the dominating principles of what make consumer business, brands, fashion, beauty, whatever they are still fundamentally the same things, just adapting to different moments in times and different technologies? Or there's always fundamental differences that come with evolution and progress?
I think a lot has changed. I think it used to be really hard to start a company and to get a brand out in the market or a product out in the market. And now that's much easier. So in the early days of, let's take beauty for an example, in the early days of beauty, when I started investing in beauty, 15 plus years ago, there were a lot of barriers to getting a business from 0 to 10 or 20 million of revenue. You had to get it on the shelf in retail stores, which meant you had to have a certain volume of product, and you had to get someone like Sephora to accept you. And then marketing, you had to advertise in magazines or, other things that are really expensive. Now you and I could decide to create a beauty brand after this call and probably get something to a few million of revenue with the relationships we have in influencers.
Let's do it.
And it's a very profitable industry. So really anyone can do it. And a lot of people have. So you see this massive brand proliferation because of the nature of digital advertising and direct to consumer distribution and the way you can kind of outsource so much of each of those pieces. And so that means creating a brand that has real staying power, that connects with the consumer, and cutting through all that noise is incredibly challenging. So those dynamics of what the hard part and the easier part, I think, have fundamentally changed. And then that then leads into, today versus a few years ago, where I think there's so much brand proliferation and the consumer is so much more aware of and savvy to this idea that I can pay an influencer to promote my product, that cutting through the noise, but also creating something that feels like it has something real to it that resonates with the consumer and keeps her coming back and creates loyalty, I think is as hard as it's ever been. And so brands now have to be really creative and thoughtful about that consumer engagement piece to just get the audience and get the awareness to begin with, but then importantly, to really create a connection with the consumer. I think that is so much harder now. And brands are now required. I think consumers want a brand to have something beyond just a good product at a good price. There needs to be more depth. What do you stand for? What's your mission? Who are the people behind this brand? I also think is so much more important now that I don't think brands thought much about that. Very few did. There were mission-driven brands that were very specifically mission-driven. And now I think brands are expected to have more depth. No matter who you are, you're expected to have something behind, more of a soul to the brand.
Yeah. So barrier of entry decreased because of whatever accessibility to capital, technology, social media, but therefore competition increased, which therefore increased the difficulty of standing out in the marketplace. And the cycle sort of like continues to change or stay the same, never ending into the future. Interesting. And going back to what you think, and this might be difficult questions for you, but going back to what you think has made you specifically a great investor over all these years, because I don't think you have, like, when you think about the stereotypical investor, I don't think people have somebody like you just described yourself, right? It's not like you're not like the stereotypical idea of what an investor looks like. So what do you think after all these years have actually made you a very good consumer business investor? Has it been your ability to relate or understand the marketplace in the way that you've seen it? Has it been your qualitative abilities and analysis? Has it just strictly been your ability to work and communicate with great people? What do you think has been that thing for you?
Well, I think a consumer investor, someone who's investing in brands overall, whether it's, me or others in my industry that have been successful, I do think it's a different industry to invest in than industrials or pure technology or other areas where it's a bit more objective. There's a lot of subjectivity to investing in brands. So there's all the quantitative elements that you would look at, the margin profile of the business, the KPIs, unit economics, all of those things those have to be there.
Of course.
But there's an element of what makes a brand successful, why one brand is successful and not another, that is much more subjective. That's what is the emotional feel to this brand? What is
there's a romance to it.
There's a romance to it. And it's both the brand and the consumer. What is the consumer gravitating towards? Who is she? What gets her excited? And what does she care about? What are her friends wearing? All of those elements that are really nuanced. And is this brand tapping into that? That I think it's easy to invest in something that feels really sexy and cool, and you don't have enough of the discipline, but it's also really easy to just look at a brand and say, this one's it's growing and it's very profitable, but not pick up on the fact that, but that's not where this industry is going. 2 years from now, that's going to be old news. So I think there's, having a healthy respect for the left brain, right brain kind of magic and logic, to quote a friend of mine, that is really critical to consumer investing in particular, brand investing in particular, that, you have to have a healthy respect for both, I think, to be successful in this space. And then related to that, and you mentioned this, I think there is an interpersonal element as well, because of investing, particularly when you're investing in founder owned and operated businesses, which is a lot of where I've spent my time. And, it's usually the case with venture investing and growth investing. There's a founder who's still really driving the innovation of the business. And in consumer and brand, you have to constantly be moving. You have to be on your toes. Somebody's always going to want to copy what you're doing. And you have to be really agile. Being able to connect with creative people as an investor, as more of a quantitative finance person, being able to really connect and have a respect and an understanding of how they think and how to communicate, and then how to really make sure that the vision and the passion is aligning with the business objectives and they're working together. They're not competing with each other. I think that's another element of it. And I know that as I've gotten kind of longer into my career and looking back, I do think that that's one area where that has allowed me to be successful is that kind of connection with the founders and the creative mind.
Interesting. Yeah. So it's very similar to what makes, well, and generalizing, of course, but it's very similar to what makes great consumer founders. They're not, it's also that balance between understanding the romance of business, the passion behind business, but also the rationality required to have something tangible that works and that connects with consumers. Yeah. Amazing. And if you could put it into, because I'm guessing this is mostly predominantly an intuitive decision-making process for you. Like, of course, you probably are, as you said, very qualitative, right? You have to be very rational, but would you say you're predominantly more of a intuitive decision maker? at the end of the day?
I think the intuitive piece is kind of it has certain stage gates. I think it's the intuitive piece is this brand is exciting. Let's spend time here. Versus you can kind of get a sense of something that's like, this is not really this is not the brand that's going to catch fire, but this one seems interesting. Let's make sure there's something really real here. And then there's that gets into the diligence process where you're going to have a very deep quantitative element of the diligence process, but you also need to really kind of assess and dig in on the more nuanced pieces of it to kind of pressure test that as well, which is harder to do in a diligence process, but there are ways you try to get around that. So I think the intuition part of it has roles throughout from the initial, I'm the first meeting, or this is a brand that I'm intrigued by, to the diligence piece. And then importantly, also to helping and supporting the company as you move forward. You have to kind of always have that check. Is this the right thing for the brand? Is this really where we want to go as a business? Is this what our consumer wants from us as you're making those strategic and financial and business decisions along the way? I think that gut and intuition plays a critical role there as well.
Of course. And would you say the first thing that happens when you are going to make an investment decision, is it a piece of intuition? A new brand comes up and you become curious all of a sudden? Is it more, oh wow, this brand is massively profitable or has a huge competitive advantage, right? Like what would you say gets everything started, just so that founders can really understand how people outside of, how investors think when looking at brands like this, and what truly should they be focusing on? Should they be focusing first on how they communicate what they're working on, how they communicate their vision, how they sell the idea of what they're working on, or the actual profitability or the actual financial health of their business? Ideally you want both, of course, but people are bad thinking about two things at once. So I'm trying to like summarize what would be sort of like the first priority for aspiring entrepreneurs or entrepreneurs out there.
Yeah, I mean, I think for the aspiring entrepreneur, for the entrepreneur who's not out there actively soliciting investment, I think it's just building the business you want to build. What is that vision that you have for your brand? Go do that in the way that you see it. Because I think for building a business to make it attractive to an investor is probably, you might be sacrificing other things. I just think that can be a distraction. Investors are going to be, and I think to your point around intuition, part of the way you develop that intuition is you meet a lot of companies. And by the time I met a brand like a Revolve or Page in the denim space, I had met a lot of other businesses that were kind of in a similar business model, similar category. And so it's kind of that it when you see it, because you've seen so many different brands. And what stood out about those types of brands is they had that balance of, in the case of Revolve, I knew Revolve as a consumer back then. I was, seeing the emails and the product, the way they were merchandising the product, the brands that they were curating, and the customer service, all those things that made it, from a consumer perspective, made it seem really special versus at the time, Shop Op and Nasty Gal, and then all the department stores trying to stand up their e-com. Revolve was doing something different that was better from a consumer perspective. But what I didn't appreciate till I met them was then, meeting the two founders, spending a little bit of time kind of behind the curtain. It was a really well-run business. And one of the founders came from technology background, the other from a business background. They built it in a very data-driven, agile way with a proprietary internally developed software, to the way they developed the logistics. Everything was built from the ground up in a very thoughtful and data-driven in a way that was indicative of, this is a brand that can really scale, that understands the levers to pull, understands how they were profitable. To our point about bootstrapping, they were profitable from the beginning. So that you had that kind of intuition piece that there's something here, but then any investor is then going to want to understand, well, what is really behind this business, and does it have scalability, defensibility, and leaders behind it that are going to be able to continue to drive it and drive the success going forward.
Interesting. Yeah, I read a study that says that all the intuition really is just your brain's subconscious ability to identify patterns that your conscious mind doesn't have the ability to do so. So if you put yourself, if you have a lot of experience, you start gathering references point of those patterns. And when you identify a pattern very, very quickly, I mean, it's something as simple as, a potential partner that ends up being potentially be a toxic partner, right? And you develop that intuition based on previous patterns that your subconscious brain has identified through experience.
Yep,
So
exactly.
it's an interesting way to look at it, because I think it's this argument, right? It's almost like binary. Like, is it intuitive decision making or is it rational decision making? But it's pretty much they're a couple, right? It's the
Yep,
same. It's the same
yep.
thing, just different parts of the process.
They're interrelated. Yep,
Hmm.
totally.
Interesting. And when you're analyzing these, I guess, brilliant entrepreneurs, have you been able to pinpoint any specific character traits, any specific conditions that are very, very important when it comes to determining their ability to grow really, really good consumer businesses?
I think there's an element of commitment and humility, a combination of commitment and humility, where even as businesses are starting to kind of take shape and grow, but having that same level of heads down commitment on just whatever the vision is, creating the
Mm,
best at this. That I think is something I've seen consistently with the founders that I've worked with that have been really successful, no matter whether things are taking off or things are going sideways, that same amount of focus and commitment to the business.
mm,
And then the humility piece of it, that I can't do everything. And this is something that I've interestingly kind of seen, to your point about pattern recognition. You kind of get you start to kind of have a bit of a pattern and a way of dealing with these things. A lot of the founders I've worked with get to that point where you do need to start building a team and delegating. And that can be one of the hardest, I think, stages of life for a company and for a founder. So that humility to understand, for me to really get this company to where it needs to be, I can't do everything, which founders often do everything in those early days. And so I need help, and I need to bring on people that I can hand things off to. Now, those people need to earn the trust of the founder to make that happen. But being able to really step back and think about, what's the role that I should be playing as the founder? What are the things that only I can do or I uniquely can do to support the business? And there are other elements of this that I can hand off to other people.
mm.
I think is really important, and often is kind of hard to get, to get over that hurdle
Of
in the
course.
early days.
Yeah, and I'm guessing it is equally as important as an investor, right? Because it pretty much summarizes your ability to be objective when it comes to whatever problem you're trying to solve, whether it's a big decision or whether it's changing the infrastructure of your company.
Absolutely. Having the objectivity, which isn't, it's hard when you have an emotional connection to your business that you
Of
built
course.
from the beginning. And it is particularly hard when things
And
aren't going well.
and particularly hard in consumer businesses.
Particularly hard in creative
Of
businesses.
course. Of
I, the creative person,
course.
as a person, am not the business. Like we're two different beings,
Yeah.
separating that. But it's also hard things, particularly in consumer, things aren't always straight line up and to the right. There's going to be bumps in the road. And so also having that kind of, like you said, the objectivity, the emotional distance from the brand to see like what's right even though this feels painful to me, is this right for the business?
Mm. Yeah. What's right for my business, or what's right for my art, whatever way you want to look at it. Yeah.
Yeah.
Interesting. And would you say that ability to be objective or to be assertive yet humble comes through experience, or is it predominantly a skill set that just a very particular set of people have?
I think it's hard. I mean, it's hard to say whether, because, I've worked with founders that this was their second, third company.
Mm,
So they were, a little bit more seasoned. And then I've worked with founders that started their businesses very young, that was the first thing they ever did. So some of it, I think, is just self-awareness that,
mm,
some people have self-awareness, some people don't, you know. So some of it may be just a personality type. But I think there's, a related element of these kind of success characteristics that are correlated with success. I also think is an openness to influence and a willingness to listen.
mm,
And I've seen that, a lot of times with founders where you have this kind of, you feel like you need to have tunnel vision because nothing's going to get in your way. Which that obsession and passion is really important too. So it's a balance, but also being able to hear input, even if you're going to take your time to think about it and process, but really having that openness to hear people, criticism, to hear different perspectives and think about it and adjust. I mean, that's a lot, kind of, I guess, a sign of maturity, but also this like self-awareness that I think I've seen with the founders I've worked with that have been successful. There's always that willingness to hear a different point of view.
interesting. And then would you say that is also one of the most closely related traits with a successful investor as well? Is it similar, or is it a completely different set of skill sets and character traits?
I mean, I think if there's a related element of that for an investor, which is a willingness to kind of get outside yourself, like get outside of what the numbers say or what other investors are doing, but to really kind of look at things with a bit more kind of with an open mind, that and to kind of to try to get a little bit more inside the mind of the founders, the creator, or get inside the mind of the consumer. I think sometimes there's a bit of a tendency with investors to be like, I'm just going to read a memo about this business and make a decision in a bit more of an arm's length way. So I think for an investor to really kind of try to connect and understand at a deeper level what's happening in this industry and what is this brand doing? How does this consumer think? I think that's where you're going to tap into those more under the radar opportunities that aren't kind of glaringly, in your face, this is the next big thing, but also to be more helpful as an investor, as a partner and an advisor to a business.
Interesting. And how do you handle the close proximity that you need to have to the brands, their vision, and their founders, to the distance that you need to continuously be objective?
Yeah, I think that tension is difficult. That tension is difficult. It's you can sometimes feel a little bit like you're emotionally you yourself as the investor can get very emotionally connected to a brand. I think, and that's something for me as I've now done this for so many years, kind of training myself to, or just, having that presence of mind to step back and say, my role is an investor and a board member. I represent the interests of the investors. So I can have a relationship with the team and feel like I'm part of the team and support them and really be, emotionally invested in what we're doing. But I also need to make sure I'm playing that role of, asking the right questions, really challenging the team. And that's part of the relationship, I think, with founders that's important to develop up front too, is you're not there to be a cheerleader all the time. You have to have that healthy respect for each other, where you're somebody that they can call when things aren't going right. So you don't want to create a relationship with your company that it's you're too much of a tough guy that you don't actually get the inside scoop on what's going on. But that there's also, there's always that accountability when we sit down and talk through the numbers or whatever it is, like be prepared to answer the tough questions from the investor.
Interesting. And when you say when it's time to ask the right questions, what are usually those right questions for you?
I mean, it depends on the situation, but a lot of times the conversations are, the tough questions might be, this is the plan, and why can't we do more, right? So here we've set out the plan for the year, pushing on, is there more we can do from a margin perspective, from a revenue perspective, and challenging any decisions that we're going to make. We're going to do a huge advertising campaign for this thing. Okay, so have we thought about how we're going to measure success? Have we tested this before we go spend X number of dollars on, so it's kind of that accountability back to the decision making. It's almost like looking at everything with an ROI, but just making sure that as we're investing, as we're budgeting out the business, that each of these things has been properly kind of vetted, pressure tested. We're looking at a big part of I would say the investor role, a big part of the role that we play at the outset is prioritization. And so a lot of times when I start working with founders, there's 100 things we want to do, because these very creative people, there's a lot of excitement, there's a lot of momentum, but you can't do 100 things really well. So let's think about, what are the 3-4 things that are really going to move the needle for this business, and put all of our effort behind those. And then there's probably going to be a few things that are nice to have, but we can't do all of these things or we're not going to be successful. And then the other is, are we really using data to make these decisions? We're saying we want to go into this new retailer, or we want to launch this new product line, but why do we want to do that? And what is it going to take to be successful there? How are we going to measure success? So putting a bit more of that financial rigor, or that, kind of data analysis rigor behind the decision-making and then the management of the business.
Interesting. And did that decision-making discipline come to you quite naturally, or was it something that, as with everything, you sort of learned through failure and reflection?
I think some of the prioritization and kind of strategic framework, all of those things, I do think came from my Bain training.
Of course.
So there's a lot of, in my early days working with TSG, who was a a lot of the people who founded and then have been part of TSG for many years also started their career at Bain and Company. So there's a lot of Bain heritage in the team. And we used to kind of say, as Bain is a consulting firm, most of their clients are kind of Fortune 500 businesses, but we would apply that same level of, of analytical rigor and strategic support and frameworks and all those things to these $20 million companies. So it's kind of a fun, way to kind of translate what we did for these big, corporate incumbents to the little challengers and give them the same toolkit that the big companies were using. So some of it, I think, came from Bain, but certainly other of it, like you said, comes from recognizing patterns over time and what are the potential pitfalls. I've seen it time and time again. So let's make sure we watch out for this thing that could be coming our way. It certainly comes from experience.
Interesting. And when it comes to potential pitfalls, I mean, how much would you say, or how do you balance the dynamic between risk aversion and optimism when it comes to decision making? Because it's also something very difficult for both investors and founders, right?
Yeah. I think as much as you can, having a test and learn mentality is so important as a small company, as a big company too. But, in the apparel space, inventory is a great example of how you just described this, right? If I don't buy enough inventory, I can't, I might not be able to grow as fast. But if I buy too much, and certainly if I buy too much of the wrong thing, then I'm going to be stuck with this stuff and have to mark it down. And, it's a huge drain on cash and all those things. So you do need to strike the balance. But the more, and this is something too that I've seen, another kind of theme of the successful business models that I've seen is a test and learn mentality. How do we translate our business model or kind of refine our business model to make it as agile as possible? So in the case of Revolve, they, as a digitally first brand, they had they were in the unique position versus a big retailer with hundreds of stores. They were in a much more advantageous position from an inventory buying perspective because they only had to buy for one door and they were buying from a lot of small brands. So they could buy much shallower quantities and see how it was going and then replenish. And that was a big part of from the beginning. And then certainly as they built the model over time and refined it and scaled it, was a test and learn, buy shallow, look at those. And then they also, importantly, versus the more traditional retailers that would look at like last season's sell-through numbers to see what we buy next season, they were looking at much more real-time signals from the consumer to see what was going to be successful so they could chase into that inventory. So that's trying to balance I know that I want to be able to drive growth. And when I find a hit product, I want to have stock in that product, but I also don't want to buy, I don't want to take massive risks with inventory, finding ways to do that. And Elf Cosmetics is another business that I worked with many years ago. And they were really innovative in the beauty space of being able, because they had direct to consumer as one of their channels back when a lot of brands did not, they could put a new product. We're going to launch a new primer product, put it on the website at this price point with this formulation, gather consumer feedback, and then we can refine it and make the product better, adjust the price point before we roll it out to thousands of stores at Target and Walmart and other places, so that we manage our risk. We mitigate that risk, but still driving towards, really exciting growth.
Interesting. Yeah. I heard a very smart saying and very simple saying that says that, when you're an entrepreneur, when you're in entrepreneurial environments, you need to, in a very sick way, glorify failure, right? Because you need to glorify learning, because that's failure is the only way that you truly learn things. But, it's a balance between, how much can you actually fail, right? So I don't remember who I heard said this, but you need to have a culture of failure, but you need to avoid tragedies at all costs.
Yeah.
So fail, but never put yourself in a position where you can, like, the cost of failure is tragedy, right?
Yeah.
You don't want to fail so hard that you're not able to come back from it.
Yeah. And I think that, exactly. Test and learn is always like, if you're testing something, well, probably the majority of the time that test is not going to go the way you thought it was. So test, fail, learn, but fail in small ways.
Yeah.
Yeah.
I 100%. And analyzing the relationship between, the risk and the reward, right? Almost like building a bridge, right? If you're going to build a bridge, you want to build it for, if a bridge can hold, I don't know, 10 tons, you want to build a bridge that can hold 50 tons just in case, right? You want a big gap in order to make those type of big decisions. So when you're looking at business decisions, specifically ones that can be tightly closed with failures, it's what's the risk reward ratio?
Yeah.
What am I risking, and what do I have potential to gain? Like, if I'm only betting $10, but I can make 1,000 if I get it right, sure, I'll bet $10, right? But if I bet $10 and I have a very large risk of losing 100, right? Then maybe it's not so smart to do so. So I
Yeah.
think entrepreneurs in general have a very, or people in general are very bad at assessing risk. And with my experience with consumer-based businesses, because you're dealing with physical products, failure can have very, very big repercussions, especially if you're bootstrapped. So you really need to start becoming a little bit more comfortable in, number one, the dynamic that you have with failure and the learning that comes from that, but also being risk averse in a way, you know?
Yeah, I agree. I mean, I think again, like you said, it's finding a way to take risks in a reasonable, within a, kind of a reasonable band, so you can continue to innovate and move forward without, putting the company at risk. And I
Mm,
think the kind of a related challenge that I've seen is if there's too much of a if you're too married and tied to how you've always done business. I've seen in other businesses kind of the inverse of taking too many risks. I've seen in some cases businesses where things were going really well and sticking to that same playbook because there's a fear of risking too much. There's a
mm.
fear of kind of throwing that flywheel off by making changes. And so I think that's another element I've seen with the brands, kind of back to your question about characteristics of successful companies, is a constantly challenging yourself and your team to evolve the model, which I think is so increasingly important in this environment we're in, where you acquire a customer, where you sell your product, where you source your product from. All those things are changing so rapidly. And so
Mm.
the brands I think that are going to be successful are the ones that are challenging themselves to kind of out innovate themselves, because the competition is always going to be nipping at your heels, and the social, the algorithms are always going to change in a way that could, disrupt the way you're doing business. So having that innovator's mentality and always moving and changing, I think is another of these characteristics of success.
Interesting. And what are your thoughts on today's overall landscape? Because on one end, you have the demand for very fast adaptation and learning, but on the other hand, you need the patience, discipline, and pace for, profitable businesses from day one that are bootstrapped, right? So how do you handle those balances? Because the last 5-7 years, I don't really know how much it lasted, where capital was so accessible, it was a little bit easier to fall into that mindset, right? Of continuous, fast, adapting learning, because the infrastructure was there to support it, right? But in
Yeah.
today's landscape, people, both the marketplace itself and investors, are more risk averse. Yet you as an entrepreneur need to have the courage and the assertiveness to develop aggressive learning processes and visions and
Yeah.
character traits. So what's your general thought of on that contrast?
Yeah, it's an interesting question about the investor conservatism. But I think, because I think you're right, investors are definitely a very different mindset now than they were 18 months ago. But I think investor mindset now, I mean, while there's an element of people have had some failure, so there's kind of there's
Of
going to be a
course,
negative hangover from that.
of
But I
course.
think the reversion to discipline, valuation discipline, profitability, businesses need to be profitable, or they need to prove their unit economics. I think that is here to stay. And in the mood, hopefully the mood lifts a bit among investors, but the discipline remains. So I think that is true. I think there's still ways for founders, for entrepreneurs to have a test and learn mindset without needing to raise, $10 million to go do a big test or take a huge risk with that $10 million. I think it just reinforces the importance of really understanding your business model and how you can do those kind of micro tests, and then creating a culture of test and learn, like you said, that's kind of fear, either it's a fear of taking risks or an orientation towards taking too many risks, which is not responsible for the business. I think creating a culture of always be testing and measuring and learning and making those refinements as you go. I think that those two things can work work in concert together. And I think it's actually something that investors even more so will be looking for, is finding companies that have the ability to do that, to test and learn in a way that they're not taking massive risks with the business, and then they're using that data to make more informed decision making. The scariest thing for an investor is if a business is just blindly, it's all blind gut. It's just, we have an idea, we'll do this. We don't have any data that tells us one way or the other. We're just going to go and do this. I think that particularly with now with so much data at your fingertips, I think there's ways, to constantly be testing and learning without having to take massive financial risks.
Interesting. And how long? Because I mean, you've probably seen cycle of this before after doing this for so long, right? Like the fear is temporary, both from an investor perspective, from the marketplace perspective. So how long and I know there's no way to read into the future and predict these cycles, but based on your experience, how long does it actually take for both investors and consumers to have any type of confidence in the market or in entrepreneurs or any confidence in the future overall?
I think this year we're in a kind of resetting of expectations year. I thought it was going to happen last year, but it's still taking a while. But I think we're in this moment now where
it was fun. It was a fun party. People don't want to let go.
It was a great party.
People don't want to let go. People don't want to leave. Yeah, it's 9 a.m. in the morning and everybody's still at the club.
Yeah, exactly. So we're all, it's like the next morning and everyone, needs a strong espresso and,
a philosophical debate.
Yeah. But I think last year there was just a massive disconnect. Founders were still thinking in 2021, 2022, early 2022 terms, and you just couldn't have a conversation. You couldn't meet, you couldn't bridge the gap. Now I think this year started out similarly, but from what I've been hearing and kind of gathering, I think there's a slow realization and kind of resetting of expectations. Investors got there quickly. It's like, okay, party's over. We're back to this. And for founders and, boards, management teams to kind of get there has taken a longer time. I think this year is that resetting and assuming that the markets kind of are seemingly pretty resilient in light of all the Fed change, the rate changes and everything going on, assuming that things remain relatively stable. I think we come out of this year with everyone kind of being on the same page or a much more similar page of valuation, expectations, term sheets, that kind of stuff. And then into next year, I think what the question will be the consumer, how are these businesses performing? Because right now we're in a moment where you have both the disconnect between founders and investors or business owners and investors, and consumer sentiment is really low. I mean, people are very nervous.
Yeah, there's no confidence.
Yeah, the confidence is very low. People are really managing their budgets because of inflation and a squeeze on their budgets, but also just because of nervousness about all the uncertainty.
Yeah, social proof. Yeah, fear is running rampant.
Yeah, and so fear is very powerful, and it is driving a lot of this. So a lot of brands are feeling that. Brands aren't performing to their own expectations. They're coming off of all of the crazy years of COVID lift, depending on your category, but a lot of brands had huge lifts in the last couple of years coming off of that. So assuming in 2024, what I would hope we see is investors and business owners are much more on the same page in terms of investment terms. And we have a more solid footing with the consumer. And then that's where I just think you see a bit of a shakeout of the companies that have real staying power, that have been able to navigate the last few years, that have real business discipline, good metrics, and then those that maybe were on shaky ground and aren't able to raise capital. I mean, there should be somewhat of a clearing out. There were so many businesses that raised money, so many businesses that cropped up in the last few years that probably weren't sustainable. And so I think there's a bit of a clearing out of that, next year, and things start to get a little bit back to kind of a steady state. And we were looking at the valuation metrics for 2021 and 2022, or maybe it was 2020 to 2022 versus the 10 years prior. And then where we are today. And really, we've just gone from like the average for the 10, 15 years before 2020 to today. Those numbers are very similar, but we had this peak that really was anomalous and was not sustainable. So it's not as though valuations today are anomalously low. They're just back to, pre-COVID.
Yeah, it seems low relative to what people were experiencing, but the truth was that what people were experiencing was not reality.
Yes.
Yeah. Okay. Interesting. And here's some food for thought. I mean, once that everything's refreshed and AI is going to come again, and then everything's going to go in who knows what direction,
Yeah. Well, maybe none of us have to do anything anymore because
maybe these conversations are all relevant,
But it gets back to your point about intuition, because I also think so much of investing, a lot of the activities we do, there's already firms that are testing AI that replaces what an analyst would do. So a lot of the commoditized pieces of the investing business, I do think AI can solve for, but that intuition piece, all the things that make the good investor a good investor,
Yeah.
I think become even more important
Yeah.
in AI.
Yeah, 100%. I mean, there's a quote that I also heard that it was quite funny. It says, "A robot won't cure cancer," which is kind of like a funny way to say
Yeah, because
exactly
there's an
that. Like,
art.
yeah,
There's always going to be an art to these things. Yeah.
interesting. And what has got you excited about the future of this resettling phase? Are you excited about the quality of the businesses that are becoming up, the quality of the founders, quality of technology? What are you mostly excited about?
Well, I am excited about this new phase because I think it will that the founders and the teams that have the ability to build sustainable businesses, they will get the attention and the funding, and it won't be, there won't be as much of this kind of grandstanding and smoke and mirrors as we talked about before. And I have just such an affinity for business owners that are heads down, this I'm going to build my company. I'm not out, speaking at huge conferences or marketing myself. I'm focused on my business. So I think this is going to be the time for those types of companies. And I also think I think it'll go back to specialist investors, kind of a stick to your knitting type of a time where you saw tech investors dabbling in consumer, you saw consumer investors dabbling in tech. There's probably true of a lot of other kind of cross-pollination. And I think the failures or the failed investments or the underperforming investments of the last few years, well, it wasn't necessarily, valuations were high across the board and marquee investors and new emerging investors, everybody got caught up in it. But I think that will just force people to kind of go back to where their core area of specialty. And so specialist investors and really focusing on where you have experience and expertise, I think will be another, big trend in the coming years. So I'm excited for that because I'm a specialist investor myself. And so I think it's going to be it's been a really tough time to invest in consumer in the last few years for a lot of obvious reasons. I think it's going to be a great time to invest in consumer in the coming years for those reasons. But you have to be cautious and careful and thoughtful, and know what you're doing. But I think it's going to be, I think there'll be a much more fertile ground for investing in the coming years.
Interesting. So a reset to discipline and focus for entrepreneurs. Excited about the discipline, times going back into discipline and focus, and also from an investment perspective. Because I'm guessing, just as a lot of brands, sort of like as you said, Tide came in and everybody was actually swimming naked. Happened with a lot of business. I'm assuming it also happened with a lot of investors, right? A lot of investment groups that were just fueled by this massive, irrational wave of greed and ambition and ease of capital.
Yeah, I think there was a time. There's certainly, an element of being diversified is helpful, but I think there were some firms that were writing checks every week because there was so much deal making happening with this idea that if I spread it
money
across,
was free. Money was pretty much
money was
eliminated.
effectively free. Yeah. And businesses were going gangbusters. These companies were performing, they were growing. There were a lot of things that were kind of all working in concert. But I think there definitely were, to your point, there were a lot of companies, a lot of investors that got caught up in it, that put a lot of money out there, whether that was crossover investors that got into these IPOs. Consumer IPOs like on average are at something like 10% of their original, stock value. You're going to see a lot of investors kind of licking their wounds, I think, for a while coming out of this. Again, I think just creates an opportunity for the more disciplined investor to kind of step back in.
Interesting. And do you think partners share that philosophy?
So I think partners, sorry.
Yeah. Do you think limited partners share that philosophy?
Yeah, absolutely. I think the LP environment, the fundraising environment is difficult right now, for a lot of reasons, but LPs in particular are feeling like they put money, or some are feeling like they put money behind GPs who then, made some bad calls. And so I think LPs are being similarly probably more kind of, let's go back to the fund managers we've known for a long time. So it's probably maybe going to be a harder environment for emerging new managers. People are going to be more risk averse,
Of course.
from that perspective. And then it's just, they're portfolios are such that it's, harder to deploy new money in certain areas. So the fundraising environment, I think, certainly will be challenging for some time. But, a lot of funds are well funded. So I think there will still be deals to get done, capital available for founders in the coming years, despite LPs being a bit more cautious, because people were able to raise capital in recent years. But I also think, to your point about like, when does that ease up? I think for the LPs, when they get their portfolios kind of more back in balance, and there's certainly a desire for growth. There's a desire to fund new managers and kind of have access to that, to that alpha, versus just kind of being with the more mature businesses. So I think there will be a desire to invest in new managers in the coming years, but there's kind of a reset happening right now for LPs.
Interesting. And since we've been talking a lot about, external conditions that are dictating how the overall consumer business fashion, whether it be fashion, beauty landscape looks like, how important do you think timing is as part of the success formula for founders and entrepreneurs?
Timing is important. I think really having an understanding, really having doing the hard thinking about, do I need to raise capital and why? What do I want this capital for? And am I at the right time in my business, where my business is and where I am with the business, to take on a partner? Because there's taking on the right partner, but also taking on a partner at the right time. I think both of those are equally important. So, I always, it breaks my heart to see, I've seen this many times where, a founder has a great business that's going really well, but they raise so much capital that at the end of the day, they own such a small piece of the business that they built. So I think making sure that you're ready for the dilution whenever it does come, and that you're at a scale where you kind of feel like I still have, the reins of this business. I can take on a partner, have somebody, who has a real seat at the table with my business, but I've gotten it to the point where I feel comfortable doing that and being in that position is important. And also, I think spending time with investors for some period of time before you take on capital, because, getting to know, it's a marriage. So you want to interview a lot of different people, have dialogues over a period of time, and really understand if they see the vision the same way you do, and they're people you can trust. So before you're ready to take an investment, I think starting to kind of plant some of those seeds is helpful as well.
Interesting. So what are the questions entrepreneurs should be asking themselves when determining the true value an investor is bringing into the table? Not only just capital. Is it skill set? Is it network? Is it time and additional time and energy to be invested into the company's development? What would you say those things, the biggest ones, are?
I think the first question is, what do you want the investor to be providing you? In some cases it is, I just want the network. I want the connections. In my experience with the companies I've worked with, they've certainly valued the kind of sounding board element of an investor. So I've heard from a lot of founders, it's very lonely being the CEO. It's lonely being the founder because I have my team. But when it comes to the big questions, like, I want somebody that I can call or sit in a room with and debate. So that is a role that I think is important, and any investor should be providing that to the companies that they invest in. But in addition to that, what I found with my companies at that growth stage is really tangible tactical resources are also very helpful. So, having a great performance marketing lead that your team can talk to about, well, this is working, this is not, and and actually getting in there and helping them refine what you're doing day in and day out. Or we have a consumer research function, so we can run all of this quantitative consumer studies and give that information to the teams to then help them make better decisions. So I think each founder's or team's going to have different expectations. Just making sure that you're really, diligencing that the investor's going to diligence you, but you should be diligencing them as well to really understand, are they going to give me the help that I need? A lot of investors I think the typical investor is willing to provide the analytical support, strategic guidance, and the network. But if you're looking for more tangible, like the more kind of operational resources, make sure that that's actually part of, and who are those people that are going to be providing that? And make sure you meet those people and really understand, that there's not kind of this is what we advertise to you, but it's actually going to be this person instead. Really make sure that you're doing the diligence and getting a real sense of who the actual people are that are going to be supporting you.
Of course. And when it comes to attracting the right investors, is Is it also like dating? Sort of like you attract what you are. You don't necessarily need to be actively looking for investments, but just focus on having a good business and you sort of attract relative to where you're at.
Yeah, no, I think there's a proactive element to attracting an investor. I think a lot of brands are more under the radar that could be really hot in their category, but could be under the radar to the investment community. And that's not necessarily a bad thing. So I think when you're ready and it's time to meet investors, call it, if you have an advisor, I mean, there's a lot of investment bankers, advisors who work in apparel, work in beauty, and will know all of the investors. So engaging an advisor could be a way to do that. Or just, if you have someone in your network who knows these folks and you can just start kind of calling, making direct outreach. But no, I think you often will have to do your own legwork to get in front of the right investors.
Interesting. So do your own legwork when it comes to your own business, build a good business, and do your own legwork when it comes to attracting good investors. And sort of like the other parts of the process, the technicalities will come sort of as you advance and execute throughout the process.
Yeah, I think so. And I do think once you're getting in the room with an investor, you do want to be buttoned up to a certain degree for that. I mean, it needs to feel authentic, and you don't want to come across as too overly prepared or, staged. But certainly if you're having a meeting with a high stakes meeting with a marquee investor, I think, doing some work in advance of that to just have your pitch, but also make sure you've got all the metrics and all of those things prepared for those types of meetings. I think you get off on the right foot better if you're prepared for that.
Awesome. Amazing, Jenny. Wow. A lot of information so far. Let's see. I guess in order to start wrapping up the episode, I guess the question that I'm sure everybody is wondering is if you could give, aspiring fashion beauty entrepreneurs any advice on approaching entrepreneurship specifically in today's environment, what do you think are the most important things they should be thinking about? Is it finding the right partners? Is it passion, being passionate about what you're doing? Is it learning when the right time to start is? Like, what do you think is that piece of advice that you give a founder that's starting off right now?
Passion is definitely important. I think for me now at this point in my career, I realize I've been very lucky to be passionate about what I do, and being passionate about what you do, especially as an entrepreneur, because you're going to live and breathe this thing. So you want the business to give you energy, and that's that it's a joy to think about, that it's something you're going to want to be immersed in 24/7. So the passion piece absolutely is important, because you're going to have to sustain it for many, many years. And I think, not letting this environment, we're in a really crazy time. So not letting all the macro stuff get in the way of, if you have a vision, start plotting out the business, get it going, and find the team, find those people that complement you, that give you energy and bring out the best in you, where you really work collaboratively as a team. But not letting this bizarre venture capital funding environment cloud, just building a business and going after your vision.
Yeah, I think that's great advice, because I think people overall tend to think on very short time periods. If things are tough right now, I'm going to make a decision based on what's, what the conditions that I'm analyzing that are happening right now. It's short term versus long term thinking. And I think when you're starting any business, if you're starting a business because you're short term thinking, you shouldn't be starting a business, right?
Yeah.
But if you're starting a business for long term thinking, then whatever is happening now is really irrelevant, right? Sure, conditions might not be ideal. Sure, this might be happening. Sure, there might be COVID in a couple of years. But if you're truly doing this for the long term, then it doesn't really matter, because everything's cyclical.
Yes.
Winter comes, then the summer or fall, or whatever the order goes like. And I think that's a very healthy mindset for entrepreneurs, that especially nowadays, that they need to start getting used to the real discipline that is required in this industry.
Absolutely. The long-term view is so important. You're right. We tend to live in these the short-term world, and also, not thinking about, I'm going to build this because I want to go take it public. I think there was a lot of that in the last few years, and that a lot of those companies' peril. There's some companies sitting out there in the public markets that are probably would have been better off just focusing and moving forward. So yeah, the long-term view. And then I guess, and the other thing I would say is everything's changing so quickly. It's a great environment to be a creative entrepreneur. There's so much that the
I agree.
incumbent brands don't see, don't appreciate, or they can't react as quickly. And so as a, young entrepreneur on the ground, seeing what's happening in whatever your space is, your category, you're going to be able to see things that the big guys can't see. And so, you shouldn't shy away from that. If you feel like you have a creative idea and something that is unique and different and isn't out there, it probably isn't out there. And there's ways to check if it's out there because everything's online. But I think it's a really interesting moment where a lot of brands are realizing there's a young generation of talent that understands how to communicate with their generation in a way that's really hard for traditional advertising, traditional brand, what have you, to replicate.
Yeah.
And so there's a moment for, the next generation of leaders that I think is pretty exciting.
Yeah. And I think, well, most entrepreneurs tend to underestimate themselves in a lot of different ways. And it's kind of similar to how when you were a teenager, at least me, when I was growing up, social media was sort of starting off. I didn't really understand the value of understanding social media because it was just natural. It was just a natural part of my development. But now that I'm 30 and I look at the skills that 18-year-olds have that I wish I had, I'm like, okay, now I understand the true power that these generations have. So I think it's a very similar mindset that aspiring entrepreneurs should have, is just believe in yourself a little bit more. You're not as stupid as you think you are.
Yeah, and there's so much opportunity out there, and the barriers are very low for building something, getting it out there, starting a following. It's an exciting time to be an entrepreneur.
Amazing, Jenny. Well, what a great conversation. It was very different to what I'm usually used to, but I think it was massively educational. It was educational for myself, so I know it's definitely going to be educational for my audience. And I cannot appreciate you taking the time to truly be here and sharing all this valuable information. Truly means a lot.
Thank you. Well, I am honored to have been invited to speak, and it was really fun for me as well. So thank you.